Good morning, everybody, says Mr. Tarun. Good morning, Mr. Tarun. So nice of you. Thank you for your good wishes. I hope we indeed all have a good morning. So, if you can hear me, let me know. We will begin. We will begin the show that we deserve. Right? Well, research guys could save money if they paid Nishant. Sometimes I leave early for library to watch the leave. Stream later on. So sweet of you. Thank you, Mr. Tarun. That's so sweet of you. Let's begin. The show that we deserve. The show that we deserve. We deserve it. We deserve it indeed. Bum 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 bum. Library. Why do you have to go to the library? Are you preparing for something, Mr. Tarun? What is that you're preparing for? Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we got to follow a tradition, right? You know the tradition. You know the tradition of the sweet and sacred simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a copper mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. Today I'm having hot water with some black pepper in it, as always. And here we go. Oh my god, beautiful. Let's do it again. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together. That's such a beautiful thing to say. With that out of the way, let's begin. So, before we begin with the analysis, the overall happenings, there's an analysis which I need to share. Okay, so there's a lot of chatter about the impact of banning of the real money apps, right? Real money gaming. Now, whatever people are writing, whatever Mr. Ashwini Vaishnav has said today, he said that it's led to even more severe ramifications than drugs and all. There's something that nobody is saying. I'll write an article about this, hopefully, if I find time. But the analysis is this, right? Real money gaming apps had a GST play of about 1000 to 2000 crores per month. Okay. Uh, Now, let's say they had a 2000 crore rupee per month, or let's say 1,500, so 20,000 crore rupees a year. If that was the GST net that the government was looking at. So it looked at for first 6 months that it collected GST, it saw like some 7,000 crore rupees. So you can expect 15 to 20,000 crores could have been collected from real money gaming apps as GST. Now, a lot of people are thinking that, hey, this is GST loss. This is going to be a loss to the exchequer for the government, right? But what nobody is seeing or nobody has written as yet, so I will, is that let's say you lose 20,000 crores in GST. But what those 20,000 crore rupees mean is that these people were essentially having a deposit value of 1 lakh crore. Okay, so 1 lakh crore rupees were going into deposits of the real money gaming apps. Deposit means when a person submits some money, that's when he pays GST, right? So if person is paying like 28% GST, which is 20,000 crores, you could be expecting somewhere around a 1 lakh crore kind of a deposit base, right? Which also coincides, by the way, with a 10% take rate. So let's say if a company called company is doing revenue of 4,000 crores, let's say Dream 11, right? That's a 10%, considering a 10% takeaway. Only Dream 11 has like deposits of about 40,000 crores, right? 40,000 crore rupees coming in the accounts of these company, just one company. So overall, this sector was looking at a deposit of 1 lakh crore. That's like 12 to 14 billion dollars. Now the point is, when this industry gets banned, what happens with that 1 lakh crore, right? It gets freed. It doesn't go inside, right? It doesn't get locked. 1 lakh crore rupees, which people, mostly rural, bottom of the pyramid, mid-market, mid-pyramid people, the 1 lakh crore rupees they were investing in, or let's say spending on the platform, they don't do that. And where does that 1 lakh crore rupees go? Where does that 12 to 14 billion dollars go? It goes into the consumption economy. Okay. Now, I'm not saying that the 1 lakh rupees is the float. Float is the money which the company keeps but doesn't own, right? So when people deposit 1 lakh crore, it's not that the 1 lakh crore stays with the companies, right? They withdraw also, they deposit, they withdraw, and so on. But still, the company keeps a lot of money in the account, right? And that 1 lakh crore essentially gets freed and goes into the consumption market. 12 to 14 billion dollars will now be available for people to actually buy the things they want, right? Something like a washing machine, or whatever FMCG product, or an electronics product, and so on and so forth. Now 12 to 14 billion dollars is not a small amount, of course. But if you look at the grand scheme of things of the Indian economy, it seems small. It's like 12 billion dollars. What the fuck? Sorry. What are you talking about? India is a 4.2 trillion dollar economy, right? People might say that. But what happens is that 1 lakh crore rupees, when it goes to the uh, uh, gaming industry and gets blocked, there's no trickle down. There's no forward play, there's no backward play. What that means is that 1 lakh crore stays inside the gaming economy, and maybe 10% of it goes to the platforms act as a rake in, but the rest is just blocked money. However, when that money goes to the market, right? When that money goes to the consumption market, it has a multiplicity of, let's say, 4 or 5. So when you buy uh, a washing machine, or let's say when you buy a small electronics packet, right? That packet needs to be packed. So that company pays the distributor, the wholesaler, the packaging company, the logistics company, the warehousing company, and so on. So that money moves in a lot of places. So that money essentially has like 4x, 5x value when it's out in the market, instead of when it was just lying around with the gaming company. So that 1 lakh crore essentially becomes 4 to 5 lakh crore, right? So that 1 lakh crore, which is essentially what, 0.5, 0.6% of the entire Indian consumption story, becomes like a 1% GDP kind of a play in cumulatively over the years. So that's a perspective which nobody is talking about right now, uh, but the government is probably seeing. So uh, you know even the winners on the betting platform will use the money for consumption, right? Says Mr. Tiwari. But the problem is, Mr. Tiwari, there are no winners. So the business model of betting is that whatever is the deposit number, X number of deposits, half of people just lose money. Half of that money stays with you. So deposit to gross is like 50%. That's the business model. Effectively, everybody loses money. That's what my betting shop friend told me. Okay. Now when they rule out, when they work with a lot of people, now he has or had, I'll have to check with what he's going to do now, but a deposit base of 3 to 4 crore rupees a month. Okay. Now straight thumb of rule is like, if we are getting deposits of 3 to 4 crores, half of those people are just gonna lose money right away. And the beauty is, even the winners, why is betting a problem? Because the winners, eventually they also lose money, you know. So they win, and they double down all their earnings at once, and they just lose all of it, all at once. So nobody wins the gaming play, and 50% of deposits are just lost, right? And that's the play. So this is the game which nobody talked about. So you heard it first here. Uh, you know, like kare. Mr. Tarun had said something. Oh, banking. Nice, Mr. Tarun. Banking is nice. So you might just be finding a lot of this very interesting, right? Because we talk so much about banking, so much about money markets, and so on and so forth. Very nice. So, moving on, let's talk about. So we talked about GDP, right? GDP growth in Q1 projected at 6.7% on strong government capex and rural demand. Pegged at 6.3 for FY26, slightly below RBI's forecast of 6.5%. Brilliant articulation, says Mr. Mittal, my brother. Apparently, he excused my F word slip, right? But I didn't complete it, so it could have been anything. So GDP projection is clocking at 6.7% for the quarter, which is not bad at all. It is not bad at all, right? We are looking at 6.3 in FY26, but to be honest, these people are essentially uh, underestimating what's going to happen right now. So, what the government has done, lock, stock, and loaded, as it's called, it's created a perfect storm for consumption and also investments, and also, uh, you know, the whole taxation and the ease of doing business bit. If you noticed what's been happening since the past 2 weeks, we got that triple B minus to triple B, right? The overseas bonds have become cheaper. That's investment, right? That's companies' adequacy. The liquidity is on. The government capex is on steroids, right? The construction is up. The GST slab goes down. Everybody starts benefiting, especially the bottom of pyramid consumption, the FMCG guys, and so on and so forth. So 5% GST is just extraordinary. Works very well. The cars get cheaper. The small cars, then all of these things, are getting aligned to essentially give a boost to consumption like never before, the likes of which we've not seen before. So the government is setting sights at like an 8% GDP growth, right? Because you know what happens is these things have an upward spiral kind of a quality. Let's say government capex is on. Overseas bonds become cheaper, external commercial borrowings become cheaper. If external commercial borrowings become cheaper for companies, what do you see happening next? Private capex starts happening next. When private capex starts happening next, more people start aligning jobs, right? And that sort of the calculations don't matter. The current assumptions start failing and faltering to capture what actually starts happening. So you might just be looking at these people's projections getting beaten with what happens in the next year. So if we are alive in the next year, we'll see where we are. But I say that the 6.3, FY26 might just get beaten down easily. Easily. Moving on. E-commerce brands are preparing for the festive push, especially with the GST thing. So they're dealing with a problem and a good news, as we've discussed. The good news first is that the GST slab is getting on, right? So a lot of the products, 99% of the products which were getting pegged at GST of 12% is gonna go at GST of 5%, right? Now that is leading to a problem called deferred purchases. Now, deferred purchases are a very big problem. You know, why is deferred purchases a very big problem? Now, we've talked about Osborne effect. That's not what I'm talking about here. Viewers of Thinkers Frequency know the Osborne effect. Obviously, the new viewers wouldn't have a clue. But if you want to know, I'll explain. Anyway, so the problem is the deferred purchases bulk up the demand at a particular time bracket, which is not good for business. What is good for business? What is good for business is uh, staggered, stable demand chart, right? The demand chart should be like this. If the demand chart essentially starts clogging up, in brackets, that causes big supply chain issues, because supply chain cannot, it's not elastic, right? Supply chain cannot just change itself by the day or by the month. And if it has to, it leads to a lot of shocks. It leads to a lot of wear and tear of the whole ecosystem. It leads to a lot of hire and fire and so on and so forth. That's why you see so much of temp hiring getting added, right? In these just 4 months of festive purchases. And now those 4 months of festive purchases are going to get clubbed with the whole GST effect, right? Due to which the deferred purchases will add to the misery. So you're going to see a lot of heat getting added to the supply chain for no good reason. Or let's say for a lot of good reason. But it's just going to be a lot of stress. So the festive rush is going to begin. And but the government couldn't have timed it better, right? Ideally, these things, if they happened like a couple of months before, it could have even been more tight, but this couldn't have been better. The stars have aligned. As somebody said, Mr. Tarun said, government is aligning their stars to boost the economy. Yeah, correct. That's the right reading of the situation. Moving on. A bad news coming from China. Foxconn has pulled out another 300 engineers from India. Now, they had pulled 300 engineers before when the ties were bad, because they didn't want to share their IP. Essentially, they didn't want to share, let's say, the technology secrets, if they can be called that. Now, people thought that that won't happen anymore, because, now the good news has started coming in. And it has. But this is what's happened with Foxconn. This is not a good news. Second such instance where Taiwanese group has had to do so in recent times. However, a good signal that is coming from China is that it's standing up to US like it doesn't give any a rat's ass to whatever's happening. It says what US is doing to India is plain and simple bullying, and we are here to support India. India can start exporting its commodities to China, and you know we'll absorb it. So that's China. China's exports, India's exports to China have also risen by 20% in the last few months. So, and they might just rise more. Now, this might sound as a very altruistic gesture from the Red Dragon. However, uh, it comes at an exchange, right? It comes at an exchange of a lot of high tech play. So they're saying that you can export your commodities to us and we'll export our high tech things to you, right? Which is essentially a wrong deal because commercial commodities, they're commodities, right? Very less opportunity uh, as far as making real money is considered, less margins. They're commodities for God's sake. So while this might sound like a very altruistic move, it is actually a double-edged sword. What it shows is that China is in a pure, you know, trade war kind of a situation with US. That instead of using this moment as, uh, let's say, a silence moment of silence, and using how it could benefit them, they're like, screw US. You know, if they're hurting India, we are with India, and we are gonna be what they've said. The envoy has said that 1 plus 1 is greater than 2 as far as India and China is considered, because we are the next growth frontiers of the Indian economy. Oh, sorry, the world economy. Now, you know what it reminds me of? It reminds me of the book The White Tiger, Arvind Adiga, where Mr. Arvind Adiga, respect, where he says the US is so yesterday, you know, India and China is where the future is. The US is, the white man is so yesterday. So that's like truly happening in right in front of our eyes. Finally, the book. When did it come out? The White Tiger. It came out. The White Tiger release. Tiger release. Book release. Year 2008. So less than 20 years, and the white man is so yesterday. It took 20 years for that to really come true, right? Moving on. The two slab GST is really kicking it. Uh, in the midst of all of this, there's a lot of bad political chit chat, which we of course won't discuss. It's just pathetic. Pathetic. Opposition is saying that, hey, you didn't consult us. For there was no discussion for banning of real money gaming. Well, the government is saying that you don't. It's just, man. Whatever optimism that you can gather for India, all of it goes right out of the window if you start following the political chit chat. It's just pathetic. Anyway, the ban of, speaking of second order effects, the ban on the gaming play is affecting the payment industry. So the payment industry, 20 to 30,000 crores worth of monthly transactions. Now this again aligns with what I said. 20 to 30,000 crores monthly transactions mean net deposits of about 10,000 to 15,000 crores, right? So payment industry, the Razor Pays, the Payus of the world, they're gonna get hit, of course. But as they get hit, they don't want to admit that it's gonna be any problem for them. So Razorpay says that it's not gonna affect us at all. Now, why do you think Razorpay is saying that? Gaming industry has been a very profitable avenue for the payment aggregators. Why are they saying? Why is Razorpay saying that our exposure to gaming was limited and it's not going to be a problem for us? Why do you think that's happening? It has something to do. Well, I'll not give it again. Just give it a thought. Why do you think Razorpay is saying that it wouldn't matter? Don't want to mingle with betting, says Mr. Tarun. Well, the real reason is that Razorpay is going to IPO. Okay, it's going to go public, and it doesn't want to screw its perception in the public market. the lal street, so to speak. So even if it's like 20, 30,000 crores of monthly transaction value, let's say half of it or one third of it must be coming to Razorpay, or one fourth, if not less, if not more. So that's like essentially six to about $1 billion of monthly transaction, right? They wouldn't want, and they are high value transactions. So Razorpay, these payment aggregators charge good money from these players. They wouldn't want to admit it because now they're going public, and they wouldn't want to screw their IPO, which makes sense. By the way, Probo has shut down its real money gaming, and so has everybody else. Dream 11. I haven't heard from Games 24/7 yet, but Dream 11 says that we're gonna shut down the real money gaming aspect, and so on and so forth. So that's good news. The whole video gaming aspect. Why didn't now a question is, why didn't these people start with the video game play before? You know, why didn't gaming apps do actual gaming before? Why did they want to go with the betting play? Because gaming essentially is first of all a very creative business, and it's also a very very difficult business. So gaming is not an easy business at all. So if you let's say talk about Rovio. Rovio is the inventor of the pioneering game called Angry Birds. Now I met the founder of Rovio, and he was supposed to invest in one of my companies back in 2018, Peter Wastabaka. And what if you look at the journey of Rovio? So Angry Birds started as a video game. They did well. The company was doing so well. The company was making so much of money. It was valued at $3.4 billion at its peak. It got downloaded so many times. It became the world's most successful game. It became a global phenomena, right? Angry Birds. Beautiful game. But what happened was that it couldn't really sustain the success. So what happens is every game has a shelf life, right? If you launch a game, that game becomes a success, then the game starts dying out, and there's a long tail effect, right? It starts losing its interest in the public imagination, and then you've got to do it again. Then you've got to make another hit. Then you've got to make another hit, and not all hits are equal, right? So while Rovio built Angry Birds and it inspired so many people, it was a very intelligent game, all respect. It couldn't follow up with Angry Birds success. Follow up the Angry Birds success with more successful games, right? And while it made money, the company became profitable, was always profitable. It got acquired for like $700 million, right? 2 years ago, or 1.5, 2 years ago. Yeah. So Rovio got acquired, and it not at a very heavy valuation considering the success that the game had, right? So mobile gaming is a very tough play, is a very very tough play, right? It's very hard to monetize games. It's very hard to create games. It's very hard to create intelligent, creative, beautiful games, because that's like real job, right? That real work these people didn't do, or they didn't want to do, right? Because that's real work, right? They would have created something. So now they might. Now they might. So very good on the government part. Moving on. Easing of rare earth bottlenecks may clear way for Indian electronics firms. Easing of curbs by China likely to open new manufacturing and R&D facilities. Now, we've not heard about what it does to the rare earth magnet, search, or let's say exploration that India was going to do. But yeah, it basically, I don't think it opens any R&D or manufacturing opportunities. I think it stays where it was, but it's a good headline, right? So that's what you get when you read between the lines. You figure out substance from the glitter, right? So would rare earth magnet easing lead to more manufacturing and R&D opportunities? Of course not. Of course not. But because this was the normal, right? This was the normal. What people are not realizing is, since before April, this was the normal. So how can it create new opportunities as far as manufacturing and R&D is considered because of easing of it? In fact, you will have new R&D opportunities because of blocking of it. Because once rare earth magnets were blocked, new companies started coming in, new research started pouring in. That how do we move away from high rare earth to low rare earth magnets or non rare earth magnets, right? How do you do that? So that essentially led to a lot of research. This will lead to business as usual, but it's a good headline. The disruption has exposed how vulnerable India is to global shocks in critical minerals. Uh, Unlike China, India hasn't sufficiently invested in securing chains, and so on and so forth. So, misleading headline, but in essence, if India keeps up with its investments, there is indeed going to be a lot of R&D and manufacturing. You know, for now, it's going to be temporary relief to a lot of electronics and EV companies, especially the two-wheeler EV companies. They should be very happy. Moving on. Speaking of happiness, bike taxis are back on Bangalore. High road breather. Ride-hailing aggregators Uber, Rapido, Ola resume services after Karnataka High Court questioned the state government on the blanket ban on trade. So this is just the usual BS that keeps happening at the courts of India, in the courts, right? The lower court says something, the higher court says something. Legal, to and fro keeps happening. Businesses get blocked, businesses get unblocked, and so on and so forth. Speaking of this, who makes money while all of this happens? You know who makes money, right? Who makes money when all of this happens? Like the lower court, the state court gave a blanket ban, then the high court gave a breather. In the midst of all of this, lawyers. You're right, Mr. Tar. Lawyers make money. Speaking of making money, DeepSeek has upgraded its AI model, and it's essentially fine-tuned to the semiconductors, that the chips that China has. So this particular innovation, the DeepSeek innovation, is essentially helping the Chinese, market as far as the availability of semiconductors is considered. Because as we know, China doesn't have access to the cutting edge semiconductors by Nvidia, right? It's getting access to the second tier ones now, but still. So what DeepSeek has been doing is, the whole Chinese, the innovation is very Chinese in nature. Mr. Tarun says, next gift you will get probably will have lawyers get money. Who makes money? The lawyers. That's an interesting t-shirt, I guess. Moving on. Microsoft curbs China access to cyber alert system. Yeah, that's okay. Moving on. Goods exports to China rise 20% to $5.8 billion during April to June. Well, that's not a lot of money, to be honest. $1 billion increment for a size of India is not really a lot of money. But this signal, it's a good signal. A lot of times, what we are actually encountering in the world is not signal, right? It's noise, right? And a lot of times, what we are encountering in the world is not really a happening, but a signal. So a lot of things that you read, a lot of things that you find out, they're mostly signals, not materially important, but very good symbols, right? So this particular bit where India's exports to China rose 20% during April to June to $5.8 billion, effectively adding $1 billion. It's not very, very material to the story, to the export story, but it's a very good signal, right? So got to differentiate where there's noise, where there's signal, and where there's substance. It's a 3-tier play: noise, signal, substance, right? Moving on. Private sector activity hits a record high in August. Services growth at an all-time high. Now, yet another signal. So we've talked a lot about the manufacturing, the PMI, the service industry, benchmark index. Private sector activity hit a new high where composite PMI output index reaching 65.2, surge in new orders 65.2, right? Service was 65.5. Now this is huge. As we've talked about, how do you read PMI? You know how to read PMI, right? We've talked about this. PMI above 50 means expansion. PMI below 50 means contraction. 65%, 65, a PMI reading of 65 signals serious expansion, right? A lot of new orders, a lot of, and this is also a signal, this is also an indicator of what can happen in the future, right? So let's say this PMI thing, it's a leading indicator. There are leading indicators and lagging indicators. This leading indicator says what's going to happen in the future as far as customer market is considered. This is obviously the B2B transactions, right? Factories getting orders from factories and so on and so forth. If this picks up, you're going to see this cascading down to the consumer level, which will signal a pickup of consumption activities. So, which will signal a pickup in economic activity in general. 65.2%. This is like nothing like this has ever been seen before. New international orders see fastest since 2014. Margins improve as output prices race ahead. So that's pretty amazing. Uh, the manufacturer rose, inching closer to 60 mark, led by smart rise in new domestic orders. So that's pretty interesting. India to also gain as China has eased the curbs on fertilizers. We've talked about this, urea. So China has given us a fresh line, breathing space with its urea exports, with its fertilizer exports, with its rare earth magnet exports, with its investments and so on and so forth. A lot of good gestures happening, a lot to be watchful for, right? Moving on. Over 20% of Russia's war period crude exports bought by India. 20% by India, then Euro, then China. So it's pretty amazing. Mr. Jaishankar has said, External Affairs Minister, that we are perplexed on US's behavior, because we are way down the list. India, then China, then Euro, right? What's happening? Why are you playing it out like that? And this essentially, this could be a, if I'm not seeing anything, I might be wrong, but this is a big mistake by Trump, right? So if you know that I read Art of the Deal, right? So how he approaches deals is like attack, do not kneel, attack. So he's constantly in the attack mode, okay? Whatever is happening, if he has the leverage, or even if he doesn't have the leverage, he'll think of attacking. That's how he tries to deal, right? Never admit defeat, attack at all times. Now, that attack stance, as far as India is considered, was totally unjustified, right? Because there India was supposedly a counterweight to China, a democratic ally. India is a democracy. West talks about democracy and so on and so forth. There was no real play to actually look at India like that. But they went down that road because they couldn't have hurt China anymore, and they wanted to arm twist Russia. But what happened? Did you look at what happened? Russia essentially had the biggest drone attack on Ukraine since a long time. So Russia, after meeting Trump, after doing everything, after having all that chit chat, Russia essentially went all guns blazing on Ukraine, which is something that we talked about, right? That Russia has all the chips. It doesn't want to stop. It doesn't like it. It has no reasons to stop now that it has come to this stage. It can go for the kill, and it is going for the kill. So all that attack that Trump had made on India, it essentially led to nothing, right? It essentially led to nothing because they couldn't have hurt China more. So he said that I might just look at China as well. The tariffs on China, I might look at that. But he couldn't have, because China has so much of leverage that if they would have increased the tariffs on China, their economy would have started hurting, right? The global energy markets would have tumbled and so on and so forth. So didn't work out in Trump's favor. That's what I feel. So now all you can do is just pray that Russia wants to stop the war. And why would it do that? So moving on. Wipro is acquiring Herman's DTS business, the digital transformation business. We talked about this for $375 million. Moving on. SEBI plans to increase tenure maturity of equity derivatives. Equity derivatives, that's hedging and so on and so forth. It's a mature market, and it's looking at more moves by SEBI to essentially lead to better outcomes as far as the whole equity derivatives play is considered. So SEBI is looking at 2 or 3 reforms. First is this maturity and tenure of equity derivatives to sort of make the market more robust for participation. And the second is that they are mulling on a pre-IPO market. Now pre-IPO shares trade in the gray market, right? That's how you trade the unlisted stocks which are going to go pre-IPO. What SEBI wants to do is create a platform, like a pre-IPO platform, where these stocks can get traded, the pre-IPO shares. So the gray market, it wants to legitimize the dealings of the gray market by some light regulations. Now that is interesting. That's very interesting. By the way, I talk a lot about Mr. Peter Thiel, right? Mr. Peter Thiel invested in a company which specialized in making a platform for unlisted shares, the ESOPs and so on and so forth. So that company essentially made a platform where ESOPs could be bought and sold and traded, right? Obviously, Indian regulations didn't allow for that kind of a platform to operate. But now SEBI is mulling on something in that direction, which is awesome. You could soon get a regulatory platform for pre-IPO play. Speaking of what's not awesome, SEBI has also surged a finance influencer in Mumbai. That's scary. That they're like searching finance influencers in Mumbai for peddling some sort of, while a live session is going on. So they were talking about some stocks in the live session, and they probably did a cavity search. Not really. I don't want to have a cavity search, man, for whatever this is. So I hope they say that if you're providing some financial provider, clarified that some financial influencers are providing legitimate education to investors. If you're providing legitimate education, we have no problem. But in the name of education, if you are misguiding the youth, promising guaranteed returns, giving calls in classroom, using live data to trade the equity market, then you're screwed. Well, I don't do that, right? This is all pure education. This is all pure discussion. I hope I don't get a call from SEBI, man. I guess I'll have to stop, boasting on the whole calls that we've made. We won't do that any longer. But that's just fun, don't you think? Moving on. RBI wants to know if 4% inflation mandate reflects new normal. So the 4% inflation mandate, that guy made 400 crore via trading, says Mr. Tiwari. Well, that justifies the cavity search, right? I didn't make 4 crores. So I guess I won't get any sort of notices, right? Who is that guy? That's pretty interesting. Thanks for letting me know about that. So this particular play, of the 4% inflation target, this was set up in 2016. So since 2016, we've been running on the 4% inflation target with two points on either side. Now RBI is asking if this is the right call, right? Maybe we can get easy on the inflation. Maybe we can let the inflation rise a bit, because if we want the economy to grow, we'll have to have inflation to grow, right? So that's what they're talking about, and but I believe 4% inflation mandate, it's it's pretty good, right? I mean, in fact, we should grow as an economy, but inflation shouldn't, because whatever growth happens in the Indian economy, it happens in some pockets and sectors, right? It doesn't percolate down the pyramid, unfortunately. So if inflation starts happening, and even if economy starts growing, you're gonna see a lot of bottom of the pyramid people getting hurt. So I think inflation targets shouldn't get revised. Let's see what happens. Moving on. Mr. Tiwari, you didn't tell me that guy. Who was that guy who made like 400 crores via trading? That's a lot of money, man. 400 crores is about $50 million. And in how much time did he take to make that kind of money? That's a very interesting. Credit spreads on Indian bonds tighten, lower borrowing costs. We've talked a lot about this. Credit spreads on Indian bonds are going down. The bonds are becoming cheaper. The yields are crunching. 10 years overseas bond. Avadut Sathe, that guy. Sorry, training. Avadut Sathe. Wow. That guy is my hero now. 400 crores in trading gains, man. That's a lot of money. Anyway, so 10-year dollar loans are at 5.4%. 10-year overseas bond are at 5.7%. Rupee loans are less than 5.4%. So bonds are essentially becoming very, very nice because of the ratings, because not just the S&P rating, which was triple B negative to triple B, also because India Incorporation is actually flush with a lot of cash. It's flush with a lot of cash, right? India Incorporation, India Incorporate, India Inc. That is all the companies of India. They have a lot of liquidity they're sitting on a lot of liquid money right now. So their borrowing costs are pretty low, which is great news. However, with most Indian companies having limited overseas payments, going to be dollar market also a big decision. So while all that is going on, the domestic bond market or the domestic borrowing market is also strong. Now this, while the foreign funds are going to be cheaper, it doesn't mean that Indian companies are going to be looking at foreign funds, because there's a lot of liquidity ease at home market as well. So that's that. Why is the lower spread? Indian GDP growth outpacing peers, improved debt to equity ratios, lower default risk, S&P upgrade. So that's a lot of good things. Weaker spreads locate lower cost of borrowings for Indian companies. However, cheaper rupee funds and competitive overseas loan rates mean that companies would not want to spend time and money in finding investors to buy their overseas bonds. So that's interesting. Credit growth tops deposit show. Fests could add shine. Bankers expecting better credit growth print in H2 of FY26. So we've discussed this a lot, and we've talked about how the credit situation is going to be bad for a couple of days, for a month or so. It's going to show some signs of weakness for a couple of months, right? And then it's going to get better. And we started talking about it during like almost in the first few episodes. Now we are sitting at the 89th episodes. 3 months have passed by, and look what's happening. Credit growth tops deposit show. Fest could add shine, right? Banks credit growth outpaced deposit growth barely weeks ahead of the Ganesh Chaturthi, which marks beginning of the festive season. So with good credit growth, these people are gonna have a good show. YOY credit growth was seen at 10.22%, while deposit growth was 10.05%, showed RBI data, which is exactly what we were talking about, that it had slowed down a bit, but it's gonna go well. So Mm-hmm. Yeah. And we talked about how deposits are not going to grow, right? Because people would want to deposit money elsewhere. Like equities are great. So people are not going to deposit a lot of money with the banks. So that's exactly what's happening. What's the time right now? It's 8:57. No, it's the time to look into the future. Never gets old. Moving on. Insurers trading cautiously on new investment tools. Equity derivatives yet to pick up. That's okay. Bad loans, despite the microfinance pressure, bad loans are at an all-time low, like a 15-year loan low, which is great news for banking. Now, when in 2014, the biggest problem that we were facing were the NPAs, right? A lot of bad loans had started getting accumulated with people, with the banks, but that is proving to have mellowed down tremendously. Even with the microfinance troubles, like the bottom of pyramid loans have a serious default rate, still they have some NPAs, but not at the top of the pyramid. The corporate loan accounts are getting better, you know. So it doesn't matter if the small guys screw the banks, right? If the big guys pay, you are happy. Which is exactly what's happening. Despite microfinance pressure, bad loans at a 15-year low. Share of bad loans expected to remain at 2.3 to 2.4% as pressure from unsecured personal loans is offset by corporate deleveraging and continued decline in gross NPAs. This is great news. Great news that overall the health of the banking sector in India is great. It's tremendous, despite whatever is happening at the bottom of the pyramid. Earlier, it used to be opposite. The bottom of the pyramid used to be very predictable, very healthy, and the top of the pyramid used to have most number of NPAs, non-performing assets. Now it's flipped. Not that bad, by the way. The flip is not that bad. It's not like everybody on the bottom of the pyramid is not paying back. But yeah, the equation has flipped, which is very good for the banking play. Moving on. Uh-huh. Higher growth in construction and farm sectors. Well, no surprise. Monsoon, good rural demand, construction due to the government capex. A lot of good things are happening as far as Indian economy is considered. Moving on. Walmart came out with its earnings and it did pretty good revenues, by the way. So Walmart did $177.4 billion in quarterly revenues. Analysts were expecting something like a $176 billion. So great news. Walmart is like a proxy for the American consumption story. So if Walmart is able to raise revenues at that scale, it's good news for Indian economy, right? Oh, sorry, American economy. But Walmart is saying that some of the tariffs we absorbed, but some of the tariffs we are going to pass on now to the consumers. And Trump administration is saying, don't do that. What is Trump going to do? Threaten Walmart now? Moving on. Global beauty firms rush to crack India's luxury code. There's a lot of money as far as the beauty and personal care market is considered, especially at the luxury play. A premium beauty market is set to quintuple by 2035. 2035. Who's seen 2035? Never trust any projection of more than 2 or 3 years, right? But anyway, these people are saying that India's luxury market is right now at $1 billion, approximately 800 million in 2023. It's going to be 4 billion by 2035, which is leading to a lot of American companies, Western European companies, and even Japanese companies, Shiseido to L'Oreal and so on, invest in India. So they are trying to capture the young and affluent shoppers with rising incomes, show report. Now the problem with the 10-year, projection is that it can go for a toss with just one flip in the job market, right? And then these people will be publishing a very, very different headline. So got to look at that very, very carefully. some private equity action happening. PAG, Apex, others in race to buy digital firm Acheon. We've talked a lot about how this is going to happen. This is going to happen. A lot of IT services company, digital companies are going to see a PE action, which is great. Which is great. Good for whatever's good for the sector. Robust exit environment, interest from strategic buyers in public market. True North remaining looking at Indian software product market estimated to grow from 15 to 44 billion dollars. This is very much in line with what Masa said when he said he's gonna buy out some major IT companies. Now, nothing of that sort happened with Masa, but everybody else started lining up their deals, which is amazing, which is pretty amazing. Moving on. US and EU trade pact has yet to define the zero to zero tariff for wines and spirits. And US wine operators are saying that we need predictability. We need to be sure that that happens, because if we are not sure that they're not going to be raising tariffs or keeping us tariff, we're going to lose out. It's going to be a bit of a problem. We can't hire people without predictability. So they are saying that we're going to sign it up. EU and US are going to track their play as far as the wines are considered, and also on the automotive sector. So automotive, EU is going to have a very low tariff of 15%. America is going to get a very good deal as well. So these, while these things were not set in stone, they are going to set in stone. So EU and US trade pact is going to go good. Speaking of that, Eurozone's business activity has also risen, right? 15-month high. Services activity continued to expand but at reduced pace, with PMI of 50.7 from 51 in July. So look at Europe's service activity, business activity. It's expanding at a rate of 50.7, while we are at 65 of PMI. So that's that. Yeah. Am I missing out anything? Manufacturing showed no table improvement. With its headline to 50.5 from 49. 49.8 it used to be earlier. Now it's 50.5. That's what's happening. So notable improvement there, but nothing in front of India, right? 65. That's huge. That's huge. Moving on. China and Pakistan are also expanding their CPEC ties. CPEC is China-Pakistan Economic Corridor, Belt and Road Initiative. That's pretty shitty, because that essentially means shot in the foot for India, right? Boeing in talks to sell up to 500 planes to China. So China is looking at buying 500 planes from Boeing in a multi-billion-dollar deal, which means China is also looking at, pleasing US to an extent, while also standing up to it. So very interesting equations, very interesting times, by the way, of whatever is happening with Russia and Ukraine. 574 drones, 40 missiles, US factory hit. Everything is gonna be very complicated. Meanwhile, Zelensky's case that Putin meet will only happen after security guarantees. So he's also sticking to his guns, ruining his country, and everything is pretty weird. But weirdness comes with a lot of interesting opportunities. Weirdness, unpredictability, flux, they bring opportunities, which is what we are doing here. We are cashing on. We are thinking about opportunities all day, every day, as entrepreneurs, as professionals, as bankers. So once again, this is what I have for you today, folks. 89th episode. This brings us to the end of the 89th episode of Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. It's 9:06. We're going to punch in anytime. Today was an especially special day. A lot of viewers and 30 minutes of daily engagement crossed. Sorry, average view duration crossed. So it means that whoever we are getting now is just watching continuously. So there's no flux. It's just that we are not growing that fast. So if we had our PMI, it would not be above 50. But we have very predictable pipeline, which is great. Thank you for watching. Big thanks to Mr. Tarun, Mr. Mittal, Mr. Tiwari, and everybody else who watched. I wish you a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. Have a nice day. Bye bye.